It's the 10th of March 2015. This is a brief market update from AHDB Market Intelligence. My name's Jack Watts. I'm the lead market analyst for cereals and oilseeds. With me today is Brenda Mullan, one of our analysts within the team, and together we're going to give you a little bit of an update of where we think we are in terms of grains and oilseeds markets. So really to start proceedings, we'll start by looking at the grains markets. And it's fair to say that we are back into a bearish trend really since the turn of the year, and that has really taken away much of the rally that we saw pre-Christmas and through the autumn. That rally in principle driven by a lack of farmer selling as a catalyst, and then lots of sentiment building around the situation in Russia and the uncertainty there. Post-Christmas, the fundamentals have ruled again, and that very heavy supply of grain on the global and European market has served to push prices slightly lower. Currency has been a big impact, of course, and we've seen really the strength of the pound against the euro has been the headline bearish factor there, really limiting the competitiveness of UK exports into the key European area. However, currency isn't completely bearish because we see that the sterling has a level of weakness against the dollar, and that's been supportive, of course, of exports of UK grains outside of Europe noticeably, really since the turn of the year. Staying on the currency theme, and the weakness of the euro maintains a level of weakness against the dollar, and that's been really supportive of European or EU grain exports, and that's supported quite rapid exports. And although it won't prevent a build-up of stocks in the European market, will probably limit the level of stock build-up that we see come the end of the season. Russia, of course, has experienced its own weakness in currency as well over recent months, and that has made Russian wheat very competitive on the global market. That has led Russian authorities to essentially bring in export restrictions and duties from the beginning of February to basically try and calm the situation. Hasn't had much of a fundamental impact on the market, but it'll be interesting to see if those are rolled over into the new crop, and that's pretty much going to be driven by what the Russian crop looks like come 2015 harvest, and of course what the market conditions are outside of Russia, but also for the currency itself. Really moving in, I suppose, now to what we're expecting to see for the new crop. It remains a very uncertain picture. Essentially, to start with, 2015-16 market season will start with higher stocks year on year, so it's fair to say that will offer some insurance, some cushion against weather events should they be seen for the growing season. It probably isn't going to offer complete protection from bigger weather events, but offers some protection nonetheless. From a global wheat area perspective, forecasts such as the HGCA are suggesting largely unchanged global wheat areas. There's a lot of detail within that though, and probably my key thought on this is that there's going to be a lot more reliance on spring wheat this season. If we look at places like US, Canada, into the Black Sea, particularly in Russia, winter crop areas are expected to be lower, and a lot of that loss is expected to be made up with spring wheat. And so that puts more pressure on the spring period, more reliance on spring weather to deliver good conditions for not just growing of crops, but the planting of that as well. And then when we consider the bigger picture, we appreciate the growing dominance of maize. Maize is also a spring-sown crop, so again, more evidence to suggest that the market is becoming more and more reliant on spring weather to deliver crop production. From a European point of view, quite logically, the grain area is expected to be slightly lower, likely to be in response to lower prices. Then that brings us on to really thinking about yields as well. And if we assume that we see more normal yields in 2015 across Europe, really that would be a year-on-year reduction in yields from the highs of 2014. And again, making another big assumption about quality, that we'd see more typical quality, particularly in the French crop. That would likely reduce quite a lot of the supply pressure that we've seen this season, supply pressure of really having a lot of feed grains in the European market. From a UK point of view, we're very much looking at a lower area indicated by the winter planting survey that was released earlier this month. For England and Wales, we await the Scottish numbers out towards the end of the month. Essentially what's behind it is likely to be the impact of blackgrass and low prices, essentially farmers looking for more cultural options to try and control this issue, which has essentially reduced the opportunity to have wheat in the rotation, although one would expect wheat to remain the dominant lion's share of the rotation. That's where we are on grains. Now really to take a look at oilseeds with Brenda.
Yeah. Well, for oilseeds so far this season has been associated with really strong demand for the US soybean exports, which has helped to stabilise oilseed prices somewhat more than the downward trend seen for grains this season. However, we're getting to the stage in the season now where the focus is changing from the United States soybeans to South American soybean production, and we're really in the key harvest period at the moment for South American soybeans. With that, there has been certain kind of levels of issues in terms of logistical issues in Brazil, as well as weather concerns in certain parts of Argentina to do with the soybean crop. However, it's not expected to really take away from the record production levels that we're expected to see this year. As I mentioned, the US soybean export pace has slowed somewhat, and we've now seen the weekly exports dropping below 1 million tonnes for the first time since October last year, and that just really kind of highlights how the market focus has shifted to South America. Also, the US dollar and the currency changes which you mentioned have really impacted on the US prices, and they really had to compete more and keep prices lower to compete in the global export market for the oilseeds complex, and with that it has helped to kind of pull oilseed prices down for the complete complex from the pressure that we saw a couple of weeks ago with the South American issues. So moving on to the new crop, we're starting to see some indications of how the crop's faring in terms of weather and how the growing progress is going, and as well as that we've seen some early indications of what the area could look like for 2015. So just to start with, for the EU rapeseed crop, across the EU as a whole, we're expecting a 3% reduction to the area this year, and with that we've seen some early estimates of the production at around 21.5 million tonnes this year. In general, for the EU, the weather has been good and growing progress has been good, so we're expecting, through kind of indications from Strategy Grains, that they may be willing to up yield forecasts for the rest of the season, but we'll have to see how well it fares out the rest of the season. Closer to home, again we've heard indications from AHDB and their crop monitoring reports that weather has been good for the progress of the UK rapeseed crop so far. And with the AHDB HGCA winter planting survey results, there's a suggestion that the area for England and Wales could reduce by 1% in 2015 compared to the total area harvested in 2014. But as you mentioned, they're really early forecasts and should be treated with a level of caution, because whenever the later winter crops and spring crops come into are more confirmed, we'll have a better indication of what the area could look like next year. But in general, it looks like it's not too different from this year. So that's it for oilseeds.
So really, to sum up where we are, what we should expect to start seeing soon is a market transitioning from really this very bearish old crop situation, driven by those strong supply fundamentals, really into a market becoming more focused on the new crop situation, which we should anticipate is going to be a completely new set of drivers. So really, it's important really that for buyers and sellers that the new crop view isn't really tainted by old crop bearishness, because we could be in a completely different situation over a series of weeks and months. So in essence, there's still an awful long way to go before there's any kind of certainty around the supply and demand for global grains and oilseeds at the global and European level. Essentially, it will be down to a mix of weather, politics and currency which drive prices. Really a set of multipliers increasing the level of uncertainty greatly. So it's really important that participants stay in touch with the markets, really using all the information available, and a good source of information is of course the HGCA website at hgca.com/markets.